people who actually do not want to give them, people who are not transparent.
Oh yeah.
They don't want to give you the full details.
Full information.
I am here to invest, and I know the risks that are there when I invest. It is either I make profits or I lose. And either way, I need to know both sides. You don't have to tell me about all the time profits.
Yeah, true.
Profits. Just tell me the whole thing as it is, and let me make my own decision.
That's true.
So those people who preach only profits. It's a good thing. It's a good thing, but
selling value.
Yeah. Let's be transparent enough. Tell me about the transaction cost. Tell me about the management fees. Because once it is transparent like that, I will know that maybe at the end of the year, once I get maybe my based on my principal amount, at the end of the year, if I say maybe I'm going to get 10%, 11%, I know what I am going to get.
True.
Hello everyone, and welcome back to the Balance It podcast. Balance It is a platform that empowers young men and women to live a purposeful life.
We delve into conversations relating to purpose-driven living, business, investments, health, and abroad experiences. I'm your host, I'm Gertrude Nasike.
And I am Eda Onyoni.
And in today's episode, it is a very special episode today because we are having our first sponsor of this episode. Yes, and we would like to thank her so much as well, and her business. And I would just give it up to Eda to tell us more about this sponsor.
Yes, so today's episode is sponsored by STL Designs.
Yes.
Just a round of applause for STL Designs. So STL Designs is a business that is based in Kenya, and they do homemade carpets and mats. You can use the homemade carpets in your living room. As you can see from the photos, you can use them in your bathroom, you can use them in your bedroom as well, you can use them at the front door as well. So STL Designs is it's a business enterprise that is based in Kenya, and they do all those as you can see from the photos. And as well, in case you need any deliveries, they can be able to do deliveries in Kenya. And also, if you're in Hungary as well, we can also be able to do the deliveries in Hungary as well. We'll just do the arrangements. And thank you so much, STL Designs, for just trusting in us and also trusting in our brands. We really appreciate.
Yeah, definitely. And we will put her contacts just on the screen so that you guys can follow up with her and just also promote her business, because we are about empowering lives to thrive.
Yes, definitely.
And what are we discussing today?
Today, in the spirit of entrepreneurship, we have to know who should we look out for in terms of giving us the right investment ideas. So today we are talking about how to choose the right investment advisor.
Wow.
Have you thought about it?
Yes, I've thought about it, especially when it came to investing in stocks or in the securities market, because that's the most recent investment I've tried this year. And yes, I was really trying to look out for those who I can maybe trust, and also just those brokerage firms that I can really work with. Yes, so it's something I've tried actually.
Okay, so now since you have tried it recently, what are some of the factors that you are looking for?
First of all, I looked at the reviews. I was looking at what people are saying about the specific brokerage firms, because I remember I had one that you use, and the other one that our guest Wilfred, who was here, had also suggested initially. And I was just looking at the reviews. Another thing that I normally look out for, and this might be for individual investment advice, I look at maybe the credentials or the qualifications of this specific advisor. For instance, if it's you, I'm more likely to trust you. Not even more likely. I've been trusting your investment advice since last year, because I also feel like you're very well versed with the financial sector, and just same to other networks that we have already, because this you've gone through the system, you have the credentials, and you've actually even tried in that investment platform. So I would say that's also another thing that I look out for.
Mm-hmm.
And maybe just to add on, maybe something else, you can look out for if there are in investment firms, maybe those regulated by specific regulations in the country, and those who are allowed to really engage in such venture. Another thing, lastly, is the budget, and this is especially if you're going to get an investment consultant who will specifically take you through the investment journey from the start all the way to the finish line. And this is like their job. So you also need to look at your budget, because there are those who would ask for very high amounts, and there are those who would ask for less.
I totally agree. And something else that maybe I can add is
Mm-hmm.
the location of these, the location of the kind of investment that I want to invest in, because when we were talking as well with the investment expert that came here, Wilfred, I remember when he was saying about investing in the dollar money market fund in Kenya, which is giving around 4%, 5%, compared to a dollar money market fund, let's say in the US, which will give a higher rate because of the location where it is based, and because US is the currency. So is the US, I mean, the dollar is the currency being used in the US. So that is why you find that in like having the dollar money market fund in the US is better and gives you a higher rate than investing such kind of currencies in Kenya. So also I after that internship, that is when now I started considering, okay, I need to also look at the kind of investment location where I'm actually investing in. I think it's very important as well.
Wow, that's really well put. And I would just like to know, as you're looking for this financial investor or investment advisor, how do you ensure that this advisor's goals actually align with your financial objectives? Yes.
There are so many of these financial advisors give, they normally have like first-hand discovery calls just to ensure they get to understand what your goals are and whether if they actually match with their goals. Because you find that maybe your financial goal is not aligned with whatever they do, and then maybe they can now refer you to somebody else. So what I normally do is, first of all, having a call with that financial advisor, if possible, if there are people that I can easily reach out to. But now, especially like in the Kenyan market, because these are people that you can easily reach out to either through email or through just ensuring that you have a call. I normally ensure that I have, first of all, a call with them, or just reaching out through email, just to understand whether they can actually meet my financial goals. It doesn't matter the amount of money that you are investing, you're investing money. So it's important to understand whether they actually meet your financial goals. And also the other thing is that trying to also have a conversation with those people so that you can be able to understand where you are at, because you might find that when I want to invest, I have an idea in mind that maybe I want to invest, let's say, in stocks. But now you find that maybe something else has come in the market that actually I didn't know when I was making that investment decision. So it is also to ensure that to just talk to those people so that I can get to understand that I am actually getting into the right financial investment opportunity that it is, or I can get something else that is more better than because this than the one that I am choosing, because these are people who are experts in their area of advisory. So I believe having that initial first call normally helps me just to understand to ensure that my financial objective is met, and also having check-ins with also like the customer care people
Wow.
to see whether I am also on track, because we might get in and then after you've gotten in, things happen in between there. So also just
Yes.
trying to have that call, or if you realize that there is something that is going waywire in between there, you raise the alarm. And often at times, like for the people that I have used the investment places that I have invested in, they have at least I have gotten like good services.
Wow.
And they normally reach out in case I need any help.
Wow. That's
Yep.
really nice.
And maybe because right now with this in this age, we have both the traditional advisors. I can say maybe like those people that you can go physically to, maybe I come to you for advice.
Yeah.
And then there are also, right now we have the robots giving advice.
Yes.
Have you tried either of them, and what would you think would be a better choice?
I would say, for me, maybe in the robot section, I would say maybe just AI, finding maybe AI through AI, like AI aided analysis or financial analysis that can help you make a decision. So I would say I have tried both of them, but I would still say I wouldn't go for a specific one, because when you look at these robo advisors, you would find that they're using data that is already out there, right? They're using data that is already out there to predict the possibilities of maybe a certain investment being a good investment, or what might really align with your goal. Because just for instance, for the traditional one, you'll make a discovery call. For the AI one, you might be asked to give us a short background of yourself, or maybe where you're looking at to invest, what's your goal, just to try and find what really aligns with you. So I would say we can actually use both of them hand in hand, and not just focus on the traditional ones, because yes, the traditional ones are very good, because I would also like a personal touch. In case I have a specific question, ask them. But I think also they're not also in a position to conclusively just give advice without using also data, which actually is from this predictive analysis that are being conducted maybe through these AI algorithms and this business intelligence aspect. Yeah, so I think I wouldn't prefer either of them, but I feel like a combination of both would really work greatly. Yes.
Yeah, I totally agree, and that reminds me when I
Yeah.
was doing forex.
Oh yeah.
At that time, I was still learning, and I decided, and then I was approached that this actually I can be able to use the robots to actually help me trade, and me I don't have to do anything. I just put my money and we have learned. Gertrude, we have learned.
Hey, you are resilient. I must
So I
attest.
just put my money there, and the robots could do all the work for you. And then now, in the beginning, you see that, oh, your money is growing, your money is growing. So you don't want to withdraw, because the more the money that you have there, the more your leverage is. So you can be able to even make more money.
Hey.
I woke up one day. I slept when it was at positive 400 from $250. I woke up the next day and it was negative 30.
Oh my goodness.
Right now I can laugh, but back then, investing $250.
That's a lot of
It's a
money,
lot of
especially
money.
back then.
Yeah, but now if I knew that I can actually use the robots and as well as use my mind, or use a traditional advisor, it would have saved me my money overnight. It would have saved me my money, because I came to realize that on that day there was some important news coming out, and now the robots could not be able to detect, so they cannot stop your losses, so they cannot. So having that traditional advisor is good, and
Yeah.
also the robots as well are good, because either way we can see the benefits.
That's a really practical example. And I would just like to know, what do you think are the red flags that people should watch out for when it comes to selecting an investment advisor?
First of all, those people who just tell you that if you get this, you're going to get rich. There are principles of wealth, and we
Yes.
have read them even in the Bible. There are principles of wealth. So you can't tell me that I am just going to put my money today and tomorrow I wake up and I am there is a way that money works.
Yeah, true.
And we have to understand those principles. So those things, and also those people who actually do not want to give them, people who are not transparent.
Oh, yeah.
They don't want to give you the full details.
Information.
I am here to invest, and I know the risks that are there when I invest. It is either I make profits or I lose. And either way, I need to know both sides. You don't have to tell me about all the time profits.
Yeah, true.
Profits. Just tell me the whole thing as it is, and let me make my own decision.
That's true.
So those people who preach only profits, it's a good thing. It's a good thing, but
selling value.
Yeah, let's be transparent enough. Tell me about the transaction cost. Tell me about the management fees. Because once it is transparent like that, I will know that maybe at the end of the year, once I get maybe my based on my principal amount, at the end of the year, if I say maybe I'm going to get 10%, 11%, I know what I am going to get.
True.
So those people who are not really transparent, that really pisses me off.
I think that's very true, and I can just attest to the same kind of red flags. Like, yo, just do your due diligence, because you can get conned out here.
Yeah. And definitely we have these transaction fees. How do you think these fees actually impact the overall value of the financial advisors?
I would say, I don't know if I would say mostly people say when you pay for something, you're actually going to get more value. Or if you're using money to make money, it's way much better than just going for free things. And maybe I agree. I think I can feel like you would find most of the financial advice that maybe you even go a step further and maybe pay for these services, you would find that maybe the kind of impact you're going to get is going to be a little bit more as compared to what you would just have done through your own, what is it called, through your own research, or just listening to people in YouTube. A good example is maybe you really want to learn more about a certain investment type, or you have 2000, because I remember this investment banker who was saying she started helping another guy invest and just take care of an investment, and right now that guy is worth millions, and he started with just like 2000, and this has been in a span of like almost 10 years. I think he just started when he got an internship, and then like just that 2000 and growing slowly by slowly. So you can imagine, if you want that personalized kind of journey, you're going to be in a better position to get more advice. And let's be honest, if you're going to appreciate someone's work, and maybe that's through uh, financial payments for these advisory services, then someone is even motivated to go out of their way. As much as, yes, their motivation might be to provide you value, but the financial reward also just gives them a little push to really want to try to help you. You understand? So I think that's how I think I would go with that. Maybe paying for financial advice would maybe impact the quality of advice. And then you can find maybe this person is there for you to really keep asking. If you have questions, you can really just be in a position to get your investment rolling in a good way, and like just doing things on your own, struggling and then making a lot of mistakes along the way. So you can imagine a situation whereby maybe you had a financial advisor when you had invested like your $250. If it had gotten to 400, and because most of them are actually very up to date with the information. If it's company stocks, they know, oh, this, maybe they're going to change the CEO of this company. They've done the analysis. This is what might happen. This is what, and it makes it a little bit much easier for them to advise you. Maybe they would say, by the way, we are foreseeing this, maybe the best thing it would be to shift your money to this other account or shift it to this other investment before something happens. So it helps really even in protecting your money. Yeah,
I totally agree, and I think we need more of those people who actually want to do the work and give that customized feedback, because everyone is looking for that customized feedback. If I'm coming to you as my financial advisor, I want you to hold me, be with me in this journey. And such kind of advices or such kind of services are what people are willing to pay for.
True.
If I know that you're going to hold my hand through this journey, because it is something that is new to me, and you're going, and I'm going to actually get the benefits, so why not
True.
pay for such kind of services?
That's very
And
true.
also, it is just on the fees. It is important when making, like, when people are making their financial decisions, it is important for people to know that there are different kind of fees when it comes to when you're making your decisions. There are maybe like the normal transaction fees, management fees, but you find that there's different hidden fees that you find that maybe like there are some people who give a flat rate for all the investors in the organization. In their platform, they give just a small flat rate fee for all your investments. Or there are some that give their rates based on a percentage of your value of investment. There are some that are customized to every investor. So it is also important to know all these fees and where are they impacting you, and those are some of the questions that you need to ask when you are having that discovery call with your financial advisor.
That's really greatly put. And just to know, like, do you think it's good to consider reviews when looking for a financial advisor? And why do you think it is?
Yeah, I think it's important because that is data that is available out there to tell you that this is a right financial advisor or it's not. But still, even with the reviews, you can easily make a judgment based on whatever services the other people have been able to get. Because especially like these days, you just go online to their page and you see, or maybe like on Twitter, you just see valid and it is raw feedback that you need before you actually make that investment with those places. Because sometimes we get to not know some of the things because either we do not have a financial background, or because we have just not been in the space for so long to know on what to look out for. So I think the reviews are very important.
That's very true. I just remembered there's a research that shows most people, while giving reviews, they actually give the negative feedback. Most people give reviews based on their negative feedback, but most people who are actually finding the product or the service really good do not give feedback, which I feel like sometimes it's true. And I think maybe it might impact also, but yes, the negative reviews are also very very good. It's just something I thought, and I remembered. Very true. Sometimes you would find, even sometimes when we post, when you post something, you would find so many people saying, you guys are really doing good. You need to go further, but you wouldn't see them in the comments, But I'm so sure, even the same thing to products. Maybe a product really worked for someone. you'd find maybe someone would be telling someone just, "Ah, by the way, this product really worked, this product really worked." But going to that page of that product, if it's a skincare product or a hand lotion, to say this is a product that works, most people won't go there. So I think also it's a tricky balance, but very true. Also, the negative reviews should also be an eye opener, because most of the time, definitely something really happened that triggered these people to really review that way.
And I think also for these, like you find these financial advisors, you find that they have different product, different services.
Yes.
So maybe if you want to invest a money market fund, or you want to buy shares, maybe you might go there. You find that most reviews are when it comes to maybe opening an account with that specific financial advisor, or most reviews are about withdrawing money from the. So you will I feel like you will find like a pattern that will help you form your decision.
True.
Despite people saying the only the negatives, you will find that there is a pattern. So you go and find somebody else, maybe like a different financial advisor, who can be able to, who you consider the reviews that maybe are less of whatever that, or maybe are more of whatever that you don't want to invest in, and less of whatever you want to invest in.
That's a good way to like put it. And that brings us to the end of the episode today. And just help us, like, share with us, what do you think are the things you look out for when you're selecting your investor, and also things that are red flags for you. Share your experiences so that we can also know, because we keep learning. Yes.
And definitely don't forget to subscribe. It is free. Subscribe, and also definitely share with your family and friends. Let's learn from each other as we continue to empower to thrive.
And until next time, bye.